Good morning and welcome to the weekly roundup for the week ending Friday the 17th of September. And as always, we hope you're enjoying these weekly reports, so please don't forget to subscribe to receive our regular reports and stock market content. Also, just worth noting that we do have a very good app that you can download onto your phones. Now, the app gives you a whole host of interesting functionality, like live trade alerts, live position management, support and resistance trade, trend identifiers, as well as our guidance for the week ahead, dividends, and of course the latest news. So if you head over to the App Store, using the flavour of your choice, Apple or Google, get it downloaded straight after the video. So in the meantime, as always, any questions that you may have, please just pop them in the comments section below. We'd love to hear from you. Finally, we invite you to follow our free stock market reports on tech stocks, banking stocks and IPOs using the link in the description below. So the markets have spent the week focused on the possible timing of central banks' next move, particularly the Fed and the BOE. Now, there has been plenty of economic data for investors to digest this week, but it hasn't actually moved stocks in the US or in Europe a great deal. Indices across the board are set for a rather flat week, heading into today at roughly the same level that they opened on Monday. So in the UK, data revealed that the UK labour market is continuing along that road to recovery. Payrolls are now back up at pre-pandemic levels, and there are over 1 million unfilled vacancies. Separately, inflation figures show that the UK consumer prices surged to the highest level in almost a decade at 3.2%. Sky-high inflation plus an improving labour market picture could encourage the BOE to hike those interest rates sooner. Meanwhile, over in the US, inflation actually cooled by more than forecast. But retail sales unexpectedly rose after a steep decline in July. Bets are rising that the Fed will taper bond purchases at the September FOMC meeting next week. Concerns over tightening monetary policy are keeping gains in stocks limited. The Nasdaq, which is compiled mainly of high-growth tech stocks, has underperformed cyclicals in the Dow Jones, which are more closely tied to the health of the economy overall. The Nasdaq is set to book losses of a fall of around 0.4% this week. In the Forex markets, the US dollar has risen across the week, which was the second straight week of gains, boosted by rising bets that the Fed could announce tapering plans at next week's FOMC meeting. The greenback trades at multi-week highs. The pound is set to finish around 0.3% lower against the dollar, and the pound was able to offer some resilience against this week's strong US dollar, thanks to that upbeat UK data and rising expectations that the BOE could raise rates as soon as mid-2022 rather than the end of 2022 as previously anticipated. As for the euro, well, it suffered at the hands of a stronger greenback, particularly given that the Eurozone data was in short supply. The euro shed around 0.4% this week versus the US dollar. In the commodities market this week, oil has surged 3.9% across the week. Now, the slow return of supply in the US following Hurricane Ida and followed by disruptions from Tropical Storm Nicholas has resulted in a much larger than expected drawdown in stockpiles. Also, underpinning the price has been the energy crisis in Europe. As for gold, well, gold is set for a weekly loss of around 1.8%, and this comes following a 2.2% decline in the previous week. The sell-off comes amid a stronger US dollar and as tightening monetary expectations rise. Of course, a move towards tightening monetary policy isn't really beneficial for non-yielding gold. In the stock markets this week, here in the UK, Associated British Foods, ABF, dropped 4% across the week after reporting a mixed bag in earnings. Now, the Primark owner raised its full-year profit outlook as weaker than expected sales at Primark were offset by strong margins in the fashion business and a solid performance in the groceries division. We also heard from the Hut Group. Now, THG dropped 6% so far this week after announcing that it will spin off its beauty division next year, which actually is the most profitable part of the business. The announcement came as the retailer also reported revenues of £958 million in H1, ahead of analyst forecasts. Over in the US, the tech giant Microsoft has gained over 3.2% this week after announcing plans for a $60 billion share buyback scheme and raises its quarterly dividend by 11%. The stock's recent surge has given it a market cap of over $2.2 trillion, the second most valuable publicly traded company. So that is it for the week. As always, thanks very much for watching. Please don't forget to subscribe and don't forget that app. Get it downloaded right now. And if you have any questions, just pop them in the comments section below. In the meantime, from all of us here at Atlantic Capital Markets, have a great weekend.